So, you've definitely heard about the AI revolution, right? And you've heard all about NVIDIA and their incredible chips. But there's this other company, one you might not know, that makes the whole AI boom even possible. Well, that company is ASML. See, they don't make the chips. They make the one-of-a-kind machines that make all the advanced chips. They are, without a doubt, the ultimate pick-and-shovel play in this AI gold rush. All right, so let's get right into it because this is the central puzzle we're going to unpack today. On one hand, ASML is pretty much an unassailable monopoly. I mean, they're the only game in town for the most advanced tech on the planet. So why on earth does its stock price jump around so much? What is the market seeing? Or maybe more importantly, what is it completely missing? First, let's just lay down the basic truth about this company. And when I say monopoly, trust me, that is not an exaggeration. I mean, just look at this. It really captures their sheer dominance. Think about it. Every single advanced AI chip, every powerful processor in a brand new data center, the brain inside every cutting-edge electric vehicle, it all begins its life inside an ASML machine. We're talking a 100% monopoly on the EUV lithography systems that are essential for this stuff. Their customers? Just the biggest names in the business. TSMC, Intel, Samsung, and they have literally no other place to go. This creates one of the most incredible competitive moats in all of modern business. And what's the result of having that kind of monopoly? Well, it's this: a backlog of orders worth nearly 39 billion euros. And look, this isn't just some fantasy projection. These are real, concrete orders just waiting to be filled. This gives them an unbelievable amount of visibility into their revenue for years to come. That's a level of security that, let's be honest, most companies can only dream of. Okay, so if that's the foundation, this unshakable monopoly, let's get back to that paradox I mentioned. If everything is so perfect, why the volatility? Let's really dig into this bizarre conflict between the company's rock-solid fundamentals and the market's, well, often panicked reaction. I mean, check out this disconnect. On one side, the company reports record-breaking new orders, something like 13.2 billion euros in just one quarter. And on the other side? The market reacts by sending the stock down by double digits. It just doesn't make sense, right? How can a company report news this good and get punished for it? Which, of course, leads us to the million-dollar question. What exactly is it that has investors so on edge? What are they focusing on that seems to completely overshadow these incredible business results?
Well, it seems like investors are climbing what we call a wall of worry, and it's basically built from three big things. First up, you've got geopolitical headwinds, specifically the U.S. export controls stopping ASML from selling its most advanced machines to China. Second, there are some growing pains with their next-generation high-NA machines. They're incredibly expensive, customers are a little slow to adopt them, and the first few they sell actually hurt their profit margins. And third, the stock is just plain expensive, which makes people worry that all the good news is already priced in.
And right here, you can see that geopolitical problem in black and white. For the last couple of years, Chinese companies were basically stockpiling ASML's older machines before restrictions got even tighter. So in the third quarter of 2025, China made up a massive 42% of sales. Just one quarter later, boom, it collapsed to 27%. So that whole pantry stuffing frenzy is basically over. And that leaves a multi-billion euro hole that ASML now has to fill somewhere else. Okay, but this is where the story gets really interesting. Because while most of Wall Street is totally fixated on new machine sales and geopolitics, they're completely missing this massive, powerful engine that's just starting to rev up inside the company. You see, the real story here, the one that explains why management is so confident despite all this noise, it's not about selling more of those city bus-sized machines. It's a detail that most people skip right over, something that's usually tucked away in the footnotes of their financial reports. It's this thing called install base management. Just think about it for a second. ASML has over 600 of these ridiculously complex EUV systems. They're basically the Formula One cars of the chip world, operating in factories all over the globe. These things require constant tuning, non-stop maintenance, and crucial software and hardware upgrades just to stay competitive. And this division? It's dedicated purely to that. And believe me, this is not a small side business. In 2025 alone, this division brought in over 8 billion euros in revenue. And the best part? This isn't cyclical sales. This is predictable, recurring revenue from service contracts and must-have upgrades. But wait, it gets even better. Here's the real kicker. The gross margin on these services is around 60%. That is software-level profitability. Think about it. If your competitor's factory upgrades their ASML machines to run 30% faster, you literally have no choice. You either pay for the upgrade or you go out of business. The switching cost is basically infinite. And this chart right here, this gets to the absolute heart of the hidden story. So while the market is obsessing over new machine sales, which are looking kind of flat, the real action is over here in the services business, which is exploding, growing at 39% year over year. This is a fundamental shift in how this company actually makes money.
You know, this is a classic playbook, and they are executing it to perfection. It's exactly what the software giant Oracle did. First, you build an installed base of a mission-critical system that your customer absolutely cannot live without. Then, you generate decades of high-margin recurring revenue by servicing and upgrading that locked-in customer base. What you're witnessing is ASML quietly transforming from a hardware manufacturer into a high-margin services powerhouse.
So what this all boils down to is two completely different stories about ASML, both competing for your attention right now. And which one you believe is going to determine how you see this company's future. So on one side, you've got all the short-term noise, China, the slow rollout of new machines, some temporary margin pressure, and just the cyclical nature of hardware. But on the other side, you have this powerful long-term signal, that massive 38 billion euro backlog, the unstoppable demand from AI, that exploding high-margin services business, and a monopoly moat that's as deep as any in history. And look, how these two stories play out has absolutely massive financial implications. In a bull case, where AI demand just keeps surging and those new machines get adopted quickly, you could be looking at a share price over 1,400 euros. In a more conservative base case, it's still around 1,000. And even in a bear case, that services business provides a really strong floor. The stakes are clearly very high.
So, the big question is, what should you be watching to figure out which of these stories is actually winning? Well, let's lay out a quick roadmap of key events that will tell the tale.
Okay, so obviously you'll want to keep an eye on the next earnings release. But honestly, the really big catalysts are a bit further down the road. In 2027, watch for Intel's ramp-up of its next-gen chips. That's a huge test for the new High-NA machines. Then, in 2028, comes the big one. Will TSMC, the world's biggest chip maker, finally adopt High-NA? And finally, by 2030, we'll see if the company actually hits its very ambitious long-term revenue targets. So to wrap this all up, the core investment thesis here is really about this fundamental disconnect. The market is reacting to temporary headwinds and cyclical fears, while underneath it all, a profound and permanent transformation into a recurring revenue services business is picking up speed every single quarter. And that really leaves us with the one big question you should be asking yourself. Is ASML just another high-tech manufacturer, destined to ride the boom and bust cycles of the semiconductor industry? Or is it something else entirely? A recurring revenue powerhouse with a moat like Standard Oil that's simply disguised as one? The answer to that question is going to determine its next decade.